are there any potential tax benefits or tax disadvantages from doing a creative finance deal?
Sure. There definitely could be some advantages, and there probably is some disadvantages. I don't know. I feel like there's probably yin and yang in all of it. But so some advantages if you're a seller, especially if you own your house outright and you sell or finance it, you might be able to. I don't know. You're not gonna not pay taxes, but you might be able to defer the taxes or keep yourself in a tax bracket, a smaller tax bracket, so you're not paying as much when it comes to, I believe, capital gains tax. So you sell a $500,000 house that you own outright as an investor. Well, you're going to pay capital gains on that. Again, I'm not a tax expert, but you'll pay something. And I know if you're under, I believe, I don't know, I think if you're under about like 150, it's a lot less than if you go over that. And so it's either long term or short term capital gains. Again, talk to someone who's a tax person. But so for a seller, it could definitely be an advantage. Um, if you're someone who's investing and buying, there are ways to avoid paying taxes or at least defer taxes doing creative finance. So you might be able to buy a house for a really low down payment that then you can do what's called a cost segregation study. And they do this study and then they can accelerate the depreciation on your home. And basically what that means is you can take a pretty large loss, and I don't want to get too deep into it because there's so much, and honestly, I'm not an expert, but you can write off a lot. And so get a good accountant who will help you do that. But there's some advantages there. I'm trying to think if there are disadvantages. Nothing pops immediately to mind, but I'm sure someone's figured out a way to have it be worse. So
I don't know of any off the top of my head, but I do think there's a ton of advantages from doing creative finance. And one of the deals that I've been a part of specifically, he wanted to sell creatively because he owned the property outright. He had bought it for 80,000. It was now worth more than 350,000. So we agreed on a price of 340, and he would have paid a very large tax bill had he sold it outright to me because he never lived in the home. So it wasn't his primary at any capacity, any point in time. So all of that would have been
yeah,
capital gains, that difference between the 340 and the 80. And so instead, he only had to pay taxes on the amount of money that he took in and takes in every year. And so I like to explain it like you could potentially find enough tax write-offs to offset 10,000, 20,000, 30,000, 40,000, versus could you find enough tax write-offs to offset 200,000, right? That's a lot more difficult. And so I think that that's one of the main tax advantages of a creative financing strategy, especially like you said, for people who own the property outright.
yeah. No, I didn't. That's a great way of putting it.